morning, friends, and welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Friends, you know this is the series we are carrying out for issue of security. Namrata, can you change the slide, please?
Yes, ma'am.
So, this is the series for masterclass on issue of security. And today's topic is an insight into SME IPO. And today our presenter is Namrata Tatia, our associate partner, and from Raipur. And we have our panelist, Mr. Jayesh Vitnani. Namrata, change the slide, please. To introduce presenter, she is currently in Chhattisgarh, advisor to Women and Child Department, Chhattisgarh, and has served as a secretary ICICI Raipur chapter. She is part of many startup corporate events with various central and state government. And as regards her practical experience, she has trained more than 2,500 entrepreneurs in their early startup to set up their business and carry out legal compliance. She was one of the delegate of UAE India Startup Exchange 2023, and she is amongst top 25 women entrepreneurs in India, as mentioned in book. Namrata?
Yes.
Can you change the slide, please? To introduce our today's panelist, Mr. Jayesh Vitnani. Jayesh Vitnani is qualified as a CS and he is a master in commerce from Gujarat University. He is carrying the rich experience of 25 years in the capital market. He is a VP at Vivro and had the capital market service division of the company. He is based at Ahmedabad. Namrata? He has been associated with Vivro since 1998 and carries a rich professional experience in investment banking, private equity transaction, mergers and acquisitions, and other capital market transactions. His diverse experience in the areas of security laws, SEBI compliance, SEBI guidelines, stock exchange regulation, Companies Act, capital market, financial service, is instrumental in leading the team successfully in completing several assignments such as IPO of equity and debt, right issue, QIPs, takeover compliances, delisting, etc. Mr. Jayesh has been chairman and member of executive committee of the Ahmedabad branch of ICSI in past and is a frequent contributor to seminars and conference organized by institute and other such bodies. Welcome, Jayesh Bhai. We are knowing Jayesh Bhai since years and years, quite decades, and we are knowing his experience in this field since years and seeing him grown over the year and year. It is pleasure to have Jayesh Bhai here. Thanks for your time.
Thank you.
And to add, as we know, Jayesh Bhai is a very much interested in knowing Indian classical music also. He is very much interested in it. So welcome, Jayesh Bhai. Thanks a lot for your time. As you know, we have other panelists, Professor Bala and Sudhakar. Both don't need any introduction. So without much time, we will start today's topic. And friends, as you know, IPO is a hot in India. And SME IPO is always a favorite topic for the PCS, and we all are always eager to know what is SME IPO, how we can, educate our small clients, not but growing clients, that they can be a big and be a famous, take the help of stock exchange and public money to grow their business. SME IPO is one of the mode where a small or mid-sized company can enter the stock market, make their shares available to public, and which increase their goodwill, not only make them ready for main board, because main board has its own compliances, its requirements. It's kind of the organization gets ready for the main board. So this very important topic, and Jayesh is since long in this field. His experience he will add, and we will look to hear from you his experience, his past, and his tips to understand what kind of requirement we have to check. So with that, I will pause and request Jayesh to say a few words on the topic, and then Mr. Sudhakar and Bala, and then Namrata, you start. Namrata, you can start. We'll try to finish intro in another 3-4 minutes. Over to Jayesh. Thank you.
Thank you, Diptiben and Mehta for inviting me as a panelist to this webinar. I am the regular attendee of this webinar, and I have been benefited, and I will equate this program with our Honorable Prime Minister's Man Ki Baat, because every member always eager to waiting for this webinar, and they look forward for the newer topics always. So thank you for continuing this program very regularly and patiently. And
thank you.
Yes. As our relationship with Mehta and Mehta goes long, and we have worked fortunately on many transactions. And whenever there is an IPO where our company is acting as a lead manager, always we have something or the other relationship with Mehta and Mehta for some services which we have availed from.
Thank you.
To give the little background, and I would try to see that where the role of a company secretary is fit into the entire SME IPO, and practical experiences, where are the gaps which we can try to fulfill together, and generally what do we expect from the promoters, the other professional colleagues in the process. So this would be larger my focus today. As
Jayesh, there is a request from the participant. If you can bring the mic near or speak a little loudly.
Okay. Am I audible now?
Yeah, this is better. Thank you.
Okay, thank you very much. So, as we know, SME IPO is a small and medium enterprise who are permitted somewhere in 2012 by SEBI, bringing out a new regulations within the SEBI ICDR. And as the the entire ecosystem progressed, maybe 10 years ago, 12 years or 5 years ago, the average size of the SME IPO used to be 8 to 10 crores. Now it has grown to 40 crores to 50 crores. So the sizable, fundraising has been happening. The investors used to be, about 1,000 to 2,000 maximum in one point in time. Now today, the record number of applications which the IPO is received, SME IPO, is more than 7 lakh applications. So that shows the strength of this particular platform, the strength of the companies which are coming out with an SME IPO, and the overall interest got generated, amongst all the the investors fraternity. Now, when it comes to the frequency of or the number of IPOs, the size of the IPOs, then definitely the roles and responsibility of the professionals increase manifold, especially in terms of the disclosure, in terms of the compliances, in terms of remedying the past non-compliances, and of course to have a more robust business plan, which can be scalable and more sustainable, to give the the decent return to the public shareholders at large. So with this background, SME IPO, I think generally the members are aware about, but when we run through the presentation, I think Namrata has made a very nice presentation. We have yesterday got a chance to go through that. So we will discuss those presentations, and then definitely we will have a more interactive session than the one-way session. Thank you, Ditiben.
Thank you. Yes, fine. Yeah.
Thank you. Over to Sudhakar.
Hi, good morning, everyone. Uh, the Before we talk this SMA IPO, I would like to say that when you are small, the challenge is to grow, whether in our age or suppose when we born, that time the main thing what we have to do is we have to grow. So there are a lot of challenges out there for us to go to the school, to go to the college, to come to the universities like that at all. Same is the case with the business also. When you are small, you have a lot of opportunities out there, a lot of challenges out there, and lot of growth opportunities are also there. But the main challenge is about the funding, because when you are a small businessman, nobody will come forward to give you the necessary funding unless until they got convinced. So one of the sources available to augment the funds requirement is to come with an IPO. But to come to the IPOs on the main board was again a big challenge, because there is a size should be big and there are a lot of compliances are there, a lot of requirements are there to bring the IPO. That's why about a decade before, a new opportunity has been given as the SME exchanges, so wherein you can bring that IPO. Of course, no doubt about it, it also got its own challenges, because SME IPOs are slightly risky. It is not everybody's cup of tea. That's why there are a lot of restrictions are also there. And whenever a SME is bringing an IPO, the compliance requirements are lesser than the main board, but compliance requirements are there, governance requirements are there. So the promoter mindset is very, very important whenever you approach your client and you suggest the clients which are small in size to come to the IPO to tap the market. One main thing what as professionals we have to do is that we have to understand and we have to also change the mindset of the promoters primarily, because we have to tell them that IPO, when you are bringing, just don't bring for the heck of money, because bringing IPO is very easy. After that, you have to sustain that. That sustaining is very, very difficult, because the public money is being invested in you and you are handling the public money, which is to be handled with a great respect with the governance norms. So that is the primary this thing. And no doubt listing requirements are there, listing compliances are to be ensured, professionals may be recruited. But once you got your what's called business listed on the company, exchanges, that point of time, what needs to be ensured is that the public, your stakeholders' good should be ahead of private good. In fact, Chanakya said that for a king, the public good should be ahead of the private good, and same is the case here also, that the promoter always have to make sacrifices. The promoter has to make sacrifices. The promoter has to ensure that the stakeholder good should be ahead of his own personal good. I give a pause here, and over the presentation, we will discuss it further and request Bala to take over.
कहीं नहीं, ये तो गुस्सों का
Akshar, can you switch off your mic, please? Yeah, Mr. Bala.
Good morning to all of you. I think our earlier panelists already elaborated. In fact, Sudhakar gave a very nice example when you are a small child, how to actually grow, which school to go, etc. He said actually. And when you talk about a SME, the name itself is just meant for small and medium enterprises. That means the smaller companies. So here the listing provides really what you call a growth driver. Because what happens once you actually list, then it gives the accessibility to the capital market. So that is why it actually being a growth driver, it is not just, as you said, for the sake of making it, as Sudhakar puts it very clearly. Another thing is when you actually go for the listing, this is another thing, it is a very cost-effective way of accessing the capital market. And again, the platform which is available, either NSE or BSE, whoever wants to have, they can choose any one of them, but each one of them has got their own norms, etc. And coupled with that, SME also enjoys a certain tax benefits which are also available as we go along. Namrata will actually talk about it. And only thing is, when we are talking about the listing, everybody thinks it is the merchant banker job. Merchant banker will assist and the things will get listed. That is the mindset is there when it comes to the SME, because probably most of the SMEs may not be required to employ the company secretary, etc., in the initial stages, etc. But when it comes to the listing, all the listed companies need to have the company secretary in place. And once the listing comes, from the day one of the listing, the compliances, LODR regulations, etc., which has to be complied with that. So that means to that extent, the complaints related to governance matters need to be well in place much before we go for listing. This is what the need is there. So in that respect, as our panelists said, what is the role company secretary can play? What is the role professional can play? What are the things? And again, coming to the mindset of the promoter, etc. These are the nitty-gritties which are actually involved before we go.
I think that is a net issue. Yeah, Namrata, you can.
I give a pause here. I'll ask Namrata to take over the presentation.
Yeah, Namrata, you can start. Thank you.
Thank you, sir. Is my screen visible?
Yeah, very much.
Okay. So, firstly, good morning, everyone, and a very happy Women's Day to everyone. We'll start with the basics. I have kept the presentation very simple, yet covering the most relevant topics. Before we start, a few fun facts, because the SME IPOs are increasing in numbers with each day. Talking about each year, number of SME IPOs from 2020 till 2024, have raised from 27 to 205 until 24, which is a big jump. And in parallel, if we talk about the funds that has been raised, in 2022 with 168 crores, now we are in 2024 data, which is closed with 7,425 crores funds raised via SME IPOs only. So since there has been a increasing number in terms of money flowing into the SME IPOs, and number of companies and startups putting in their company into the SME IPO platform, I think the numbers and funds both are increasing, and we can also see foreign venture capital investor FVCI is also stepping in the SME IPO. So since now is the time, and hence we are covering this relevant topic. Now, starting right from the basics, the SME IPO market in India is evolving with numerous opportunities, both for the business as a company to grow, and also for the investors when they put in their money. The valuation game is going really well in the SME platforms. With continued regulatory support and increasing awareness, it is also there can also be the future growth that we can see coming. And thus, as professionals, as team from Mehta and Mehta, this webinar is to help and assist other professionals to make sure that they comply well with the SME IPO regulations covering Companies Act, SEBI, LODR, ICDR, and every applicable laws in the processes. Now, talking about the key points why SME IPO landscape is shaping well. The first is as the continuous growth, because SME IPO market is poised for future expansion, and it's also supported by favorable government policies and increasing investor interest. Second is increasing number of listing. So the number of SME IPOs has surged, reflecting confidence among the SMEs in the public market. The third is access to capital. Going public provides SMEs with a platform to raise funds while enhancing their visibility and, of course, the credibility that comes with it in the market. The fourth is the the growing retail participation. Retail investors are increasing, and they're more attracted, aware towards the SME IPOs today due to the high growth potential. The next, there are multiple regulatory bodies and intermediaries involved, and That way, we have just covered the major, agencies that has to be worked on as the companies step into the IPO, SME IPOs processes. First, we have the merchant bankers. Merchant bankers majorly lead the process and structure the SME IPO deal. Then we also have bodies like SEBI, stock exchanges, registrar of companies. Then we have legal advisors, registrar and transfer agents, underwriters, brokers. Then auditors, statutory auditors, depositories, NSDL, CDSL, BTI, sponsor banks. Then we have AD agencies, printers, and monitoring agencies. Next, we have the type of IPOs. So first is fresh issue, wherein the company issues the fresh lot of shares. And the second is offer for sale, where the new shares are not offered, but the existing shares in the hands of promoter or existing shareholders are being diluted and put across in the market. So the money doesn't flow into the company, rather the money raised will be received by the existing shareholder who dilutes his or her shares. Then the third possible way for the IPO is to combine the two, which is a fresh issue and the offer for sale. Next, we have benefits of listing to companies. In terms of companies coming up with SME coming up in
Amrita,
the
1 minute
yeah,
before you go with the benefits of listing, just if you can go to the first slide,
sure, sir.
I'd like to add 1 or 2 things there.
Sure.
You see that, sorry, second slide I meant to say, sorry. See, if you say this, all these are intermediaries. They are not going to be with the company. They are only enabling the company to come to the stock market, to make that IPO successful and to get the shares listed. And after that, their role is not going to be there. Who is going to be with the company is primarily the professionals who are working for the company. And because most of the participants are company secretaries and chartered accountants, who are the people who are working as the KMPs, their role is more in the whole process, right from the time the companies start. I mean, most of the times SMEs are the startups which are actually converting into SMEs and they tap the market. Or sometimes it may so happen when you start the business, the angel investors or the private equity partners are there. So it is the CFO as well as CS, both together, they have to nurture and nourish the company. They have to inculcate the compliance culture right from the inception, not only of the company's what's called as FIs, but also of the promoter mindset. This is what I'm repeatedly saying this, the promoter mindset, because most of the times what happens is the promoters, when they're coming to the public for the first time, they have to ensure a lot of compliances and they have to make a lot of sacrifices also. So the promoter might not be prepared for that. That is very, very important. Okay, because he should not think that he and the company are one and the same. Whatever he was doing with the company or in the company till yesterday, he may not be able to do it today or maybe tomorrow. That is very, very important. That transformation has to take place, and it is the responsibility of the company secretary as well as of the CFO. Similarly, when you are going for an IPO, you have to reconstitute your board. So it is always advisable the whoever are the chartered accountants or company secretaries acting as employees or advisors to that particular company. They have to also be a part of that while you are constituting the board. The requisite skill sets of the board is very, very important. Apart from the domain expertise, they need also legal expertise, financial expertise, strategy, and so many things like that. That is very important because it is a transformation to the promoter, according to me, especially in case of SME IPOs. That during that transformation, he need not only the support of the people, he need the right advice of the people at the right time and place also. This is very, very important. Yeah. Yes, Namrata, please go ahead.
Namrata, have you covered the role of each intermediary in this process later on?
So I can take
Yeah,
few
please,
tips,
Jayesh, that will be helpful.
so that will give a clarity to members here. So see, as such in SME IPO, the unlike the main board IPO, where the draft red herring prospectus is filed with SEBI for their observations and the comments. Without receiving that, the company cannot, come out with an IPO. Now, in case of SME IPO, there is no such requirement. So SEBI has done away with the requirement of filing the DRHP with SEBI. Instead, the stock exchange with whom the company wants to go for the listing, the document needs to be filed with that stock exchange, either BSE or NSE. Then BSE and NSE gives the approval or the in principle approval. Then the company can go with the IPO. So that can, save almost more than 2 months time sometime, because SEBI takes its own, time, 2 months, 3 months sometime to process the document. Now, a lot of, company secretaries, chartered accountant ask us, since SEBI is not there, then there is a lot of relaxed disclosure. Answer is no. See, what SEBI insists that you have to extremely careful while you make the disclosure. It should be in line with the SEBI ICDR. There is no main board as a small board, different disclosure. Disclosure is same. The stock exchange takes extra efforts to go through the document, like SEBI does. Even on top of that, stock exchange official visits the company factories, company offices. They personally meet the promoters, which SEBI doesn't do in a main board IPO also. So the stock exchanges are going little extra because they also wanted to handhold them for 3 years when they are in SME board to see that they are smoothly migrated to the main board. So the role of stock exchange is much more than the SEBI. But of course, yes, when the document is finalized after the stock exchange approval, it is filed with SEBI for the record purpose and the dissemination purpose. Registrar of companies, yes, we have to file the RHP and the prospectus. Fortunately, both are the straight through process. So no need to much, interact with the ROC offices. Once you file, I think they take on record and it is registered. So these are the regulatory part. Now, when we talk about the entities which are registered with SEBI. Now, registered with SEBI, other than merchant banker, the registrar and transfer agent is a registered entity. Underwriters and the brokers are registered entity. So the role of RTI is to see that the entire allotment process is done, as per the process given under the ICDR. And is there any grievances related to the allotment or the process of the allocations? I think registrar is primarily responsible. Of course, merchant banker is overall responsible. The registrar is the primary responsible. Then the SME IPO has to be fully underwritten. Now, unlike main board IPO, which is different than the SME, so SME needs to be compulsorily underwritten. So merchant banker is primarily playing a role of an underwriter. On top of that, there are also SEBI registered underwriters. They can also participate in underwriting the issue. Brokers play a role of collecting the applications and bidding those applications. And as per their bidding, they are eligible for the brokerage. So that is the role of the broker. Legal advisor, secretarial advisor, I think legal advisor is just one word, but I would also add the secretarial advisor and the financial advisors. They help the merchant banker to conduct the diligence. And when we are supposed to give a due diligence note and the certificate to the SEBI and the stock exchange, we also make a mention of the name of the legal advisors, statutory auditors, and the company secretaries that they have assisted us in conducting the due diligence. Okay, and we take their official report as well. Statutory auditor are supposed to give the restatement of the accounts, tax benefit certificates, and there are certain other auditors' deliverables. Largely the financial information which are reflected in the prospectus need to be certified by the statutory auditors. NSDL, CDSL, they have a role to act as a depositories. So they are the custodian of the shares which are issued by the company. Bankers to the agreement and the sponsor banks. So they facilitate the banking part in the entire IPO process. So where we open the escrow account, fund is collected by the sponsor bank, then it is transferred to the company's escrow account and to the company's account. Then we have the advertising agency and the printers. So advertising agency or the PR agency help us to do the promotional activity for the IPO. There are few good agencies in the industry. They are really having a wherewithal of the regulatory understanding of the SEBI, and they advise the company that how within the framework of the SEBI law you can do the entire ad campaign. Printer help us in printing the application form, prospectus, and other the issue materials. When any public issue is of more than 100 crores, fresh issue, then there is a compulsory requirement to appoint the monitoring agency. Now, monitoring agencies are those who are registered with SEBI. SEBI has prescribed that only the credit rating agencies are eligible to be registered as a monitoring agency. So right now, if you take CRISIL, ICRA, CARE, Fitch, India Ratings, they are all the accredited monitoring agency. And the objective is when there is a larger issue size, then the monitoring of that fund is very important, because the merchant banker, as Sudhakar sir has rightly pointed out, once the issue is over, all the agencies will disappear. But then who will take care of the fund utilization? So in addition to the regular professional, there is a monitoring agency. It will act to see that the fund mobilized is utilized as per the purpose disclosed in the prospectus and the timeline disclosed in the prospectus. Thank you. Namrata, we can.
You can
I
also
would like-
appoint,
Yes, sir.
Jayesh, you can also appoint voluntarily monitoring agency, even if it is not the
Yes,
threshold
sir.
limit.
Yes,
also.
sir. Yes, sir. Yes, sir. We have done in the past in some of
Yeah,
our
I have seen in some of the companies.
Yes.
So
Yes.
that is why I raised this question, number one.
Yes.
Number two, somebody has actually put up a question. Can you actually explain the role of the CFO? Major role of this CFO.
See now, if you look at there are, I would say CFO and the company secretary within the organization, and the statutory auditor or finance consultant and the practicing company secretary outside the organizations. So they are the real driver of the entire process within the company, because the DRHP consists of about main and subsection put together about 30 sections. Now 30 sections, 50% sections talk about the financial and the business information, and 50% chapters are related to the secretarial and the legal chapters. So whenever we need to disclose the financial and the business section, the role of the CFO comes into play. Major role of the CFO is to conceive and advise the management to have the more sustainable business plan for which the company is going to raise the money. This is one of the most critical role of the CFO. Okay.
Somebody is also asking what is the role of the market maker in the SME IPO?
Yeah. So market maker is a broker. Now SEBI has when they have come out with the SME IPO framework, the major feedback was that since these are the small issues and the larger investors are investing more than 1 lakh rupees, then the liquidity in the market may be lower. So the market maker plays a role to facilitate, to create the liquidity. So typically what happens in the SME IPO, the 5% of the issue size is allocated to the market maker. Okay, so he holds this inventory for a period of 3 years. So whenever there is a demand in the market, he has to liquidate some of the shares which are with him to the market, so that there is a liquidity. And if there is a seller in the market, then the market maker will have to put the buy order to ensure that this liquidity is created. As per the SEBI regulation, the 75% of the time during the market hours, the market maker will have to put the buy and sell orders on a continuous basis. So that is a requirement.
Yes, Namrata. Please go. Yeah.
Yes.
Yes, Dipti.
Very nicely mentioned. This was very necessary for participant to understand the role. Yeah,
Yes.
go ahead.
Yes. So now we'll quickly understand the basics and benefits, and then we'll jump to the regulations. Here, first of all, the benefits in terms of companies would be the capital for expansion and long-term working capital. Debt burden would be reduced. Credit ratings improves, and thus the financing cost reduces. Market perception enhances, which leads to the higher sales. Then we have impact on branding, increased visibility of the company, boosting marketing efforts, value creation. Company's profile is now visible to the media, to the market, and to the ecosystem, which raises companies' profit eventually. Incentive to the employees as listed shares can be used as HR tool as well for employees' retainment or as a stock option. Impact on funding expands investor base, generating capital creation, generates an independent valuation, of course, leading to a better valuation of company in the market. Marketing of the company increases, visibility increases, transparency increases, leads to clear disclosures, and then, of course, the tax benefits that comes to the investor in the long-term capital gain way where the tax rates are reduced, and then, of course, the exemption from tax upon listing of the shares. Now, on the other side, for the shareholders, the benefits are mostly on the terms of taxation, where first, for promoters, if they hold, which is the basic requirement, to hold 20% of post-issue share capital, and that will be locked in for 3 years. Now, if it's a very new company, those 3 years can be counted and secured, and thus after lock-in period, they'll have a long-term capital gain instead of short-term. So that way they get a reduced percentage of taxation. Similarly, for non-promoters, since the sale of shares after listing and completion of statutory processes takes a lock-in of 1 year, thus even their capital gains would be attracted towards the long-term instead of the short-term. Similarly, if we talk in the bigger picture, the significant decrease in short-term capital gains and long-term capital gains. So here, 20% for unlisted, 10 for listed, 30 for unlisted, 15 for listed. In this 30, we assume the tax slab would be at a higher end, covering the slab-wise scope of taxation. Next, of course, the value creation and liquidity are of the prime importance to shareholders because they can float in and put their money out in the market to grab liquid cash whenever required. And even if they hold shares, the valuation is keeping, booming, and thus the investors get their wealth multifold. So that's on this end. Now, we'll talk about a few top SMEs in terms of funds raised. So, as a matter of fact that we all need some case studies to refer before we take in some cases or, even for the companies, CFOs, KMPs. So here, KP Green Engineering Limited, they had an excellent IPO in terms of the quantity of fund raised. Saharsa Electronic Solutions and SAR Televentures Limited. Next, we have top SMEs in terms of subscription or oversubscriptions. So HOAC Foods India Limited, KC Energies and Infra Limited, Medicam and Organics Limited. Then are the top anchor investors who have invested in SME IPOs. First is Rajasthan Global Securities Private Limited, Nuff Capital VCC, Sane Capital Fund, FinAvenues, Craft Emerging, Meru Investment, Persistent Growth Funds, Vikasa Capital, and Moneywise Financial Services Private Limited. Yes, the rates of interest have been revised, and that would be definitely considered. Now, again, value is unlocked benefits, values unlocked, fund raised, higher credibility. We have all talked about this, so I'm jumping the slides now. Here we are in the IPO eligibility slide, where we'll talk about what are the bare minimum requirements and as per the BSE SMEs and NSE requirements. So firstly, both this require a company incorporated under the Companies Act. It could be 1956 or the latest 2030. Then we have post-issue paid up capital for which maximum caps are there of the 25 CR. we have net worth requirement for the immediately preceding 2 years, a minimum of 1 crore. And for NSE, it says the positive net worth would be required. Tangible assets, in terms of BSE, it's going to be 3 CR. For NSE, no tangible assets requirement mentioned, and also no leverage ratio mentioned. But for BSE, it should be 3:1 ideal. For the track record, NSE talks about it that the track record of 3 financial years with an operating profit of 2 financial years is required. While for BSE, track record of 3 financial years with operating profit, earning before interest, depreciation, and tax, and operations in any of the 2 financial years to be positive, and then operations in audited financial years for at least 1 full financial year for the applicant company seeking listing. So, Jayesh sir, if you want to share some thing here, your views and opinions.
Yeah, I think there are 2 things. One is, of course, somebody has put on the question on the text. So I'll just, I think this slide is little dated. So currently, I think the tax rates were simplified. So long-term capital gain for, both listed and unlisted is, as per the new law, is 12.5. And for short-term capital gain, it is 20%. And for the listed company, and for the unlisted, it is, of course, as per the slab rate. So I think there is a simplification on the tax, as we have, during the July budget itself.
Yeah, that is right.
Now,
It's come from financial year 24-25. I
yes,
think the last budget, our
yes,
finance minister has made it. Yeah.
yes. They simplified the tax rate instead of, keeping it more complicated.
Yeah.
Secondly, this apart from the track record which Namrata has mentioned, NSE has also come out with additional requirement, that is the free cash flow to the equity shareholders, FCFE. So they prescribed that 2 out of 3 financial years, completed financial years, the company should be a positive FCFE. Then they can list on the NSE emerge. Now, when we had an interaction with NSE on this line, so they have mentioned that they have studied about 300 plus companies which got listed on both BSE and NSE. And they found that after the listing, maybe 1 or 2 years time, the company was more than 70% companies were FCFE negative. So meaning thereby there is no free cash flow available to the equity shareholders. So in order to discourage those companies which is not generating enough free cash flow for the equity shareholders, then how can they give the return to the equity shareholders? So with this consideration, they have put this condition, and many companies during that filter got sidelined and became non-eligible. So, but it is good for the entire ecosystem, and it will ensure that the good companies only will come for the SME IPO, which has a free cash flow available to the equity shareholders.
Jayesh bhai, correct me if I am wrong, that in case of SME listings, the SME can go only with one exchange, not with both the exchanges
Yes.
simultaneously. Okay,
Yes.
whether they may go with BSE or they may go with NSE, that is what they have to
Correct.
decide. Number
Correct.
1. Number 2, also the shares dealing will be only on that particular exchange, not in both the exchanges.
Yes.
Yeah.
Very true.
That's why the requirements are separate. For BSE
Yes.
requirements, NSE requirements, what Namrata
Yes.
has explained,
Yes.
that is because of that.
And somebody
Yeah, you're
also put a.
you're,
Yes, sir. Sorry.
no, you're absolutely correct, Sudhakar, because it is, you know, to choose whether you want to go with the BSE or you want to go with the NSE. That is the thing. Although general eligibility criteria is there, each stock exchanges has actually done their own conditions when you go with the particular exchange. You are right, actually. Yeah.
There are
Yes,
2 questions I would like to touch base quickly. One is somebody has asked whether I can annualize the profit. I think the answer is no. You have to take the full financial year, completed financial years, in order to calculate the FCFE. And number 2, somebody has also asked about whether the merchant banker can act as a market maker. The answer is no. Only the brokers who is empaneled with the stock exchange as a market maker can only participate and act as a because the merchant maker, as per the law, cannot be a broker. In order
I
to
think
be a market maker,
No,
You have to be a professional.
merchant banker can be a market maker post IPO for a period of 3
No,
years, I believe. Yeah,
Only broker.
yeah, I see.
Only broker. Because merchant banker
Okay,
cannot act as a broker. They are
I
not.
see. Somehow that I was under the impression merchant banker can act as a broker also
No,
after the post IPO for a period of 3 years, subject to certain
no,
conditions.
no, no.
Okay. I stand corrected. Yeah, thank you.
Yeah. Any questions? If somebody can just, if it's relevant, though, we can answer those
Yeah,
questions.
somebody said how to calculate the NTA. NTA calculation is very easy. Net tangible assets used to be total assets minus the total liabilities. Again, you have to reduce the intangible assets. It's as per the formula. I don't know
Yes.
why this question has been actually put up here. That is one thing. If there is any cost benefit both to the stock exchanges, 1 minute. Is there any cost benefit both the stock exchanges if opted for the listing?
Sorry, is there any SME? So,
Is there a
no.
cost benefit to the stock exchanges? I don't know.
Cost benefit means basically when we are opting for either BSC or NSC, which is
Yeah.
the economical one? Is it the criteria to be decided? What is the criteria to decide? That is what I think the question is.
So there is
Okay.
no.
Which stock exchange I have to go with?
No, that is a individual choice. Absolutely, there is no. Both exchanges are extremely good, extremely cooperative, helping the SMEs to get listed on their platform. So there is no difference at all. There is one interesting question on: is there any SME index like for public companies for investing instead of directly investing in IPO? This is very important. And see, there is a SME index, BSE and NSE both, but you can't do the derivative trade on those, unlike the main board small cap index, mid cap index like this. Why? I think the question is because in order to be compliant with the derivative trade, the particular script also needs to be F&O compliant.
Yeah, I also saw some of the, BSC SME IPO, Nifty SME Emerging Index, and the SME Policy Index, etc., and other things and all.
Yeah, that
So
is there.
probably, yeah.
But the SME index per se, SME
Yeah.
Emerge or BSE SME index per se are not eligible for derivative trade
Okay.
because the underlying securities are not F&O compliant or the derivative compliant.
Okay. Can a company newly incorporated by way of the takeover of a firm having the track record would be eligible to list in the SME?
So now the exchange have, come out with some directions, not maybe officially, but they are saying there, of course, NSE has, BSE has come out with officially, but they are saying that there has to be an existence of 1 year of operation of a company being listed, being incorporated. Okay. So instead of taking over the business of a partnership firm, my suggestion is if a partnership firm can be converted into a company under the Companies Act provision, then the continuity of all the financials, the operations can be disclosed in the prospectus, and then they become eligible.
What are the kind of charges involved in the coming up with the IPO with the NSE and BSE? Tentatively, what would each intermediary also charge, which will actually help us to understand the costing involved for the entire SME journey?
So kindly take my number, contact me independently. Because let's not discuss on the cost and all these things. Let's be more focused on the education part. Or may contact Deepen also.
No, of course. Yeah. But it
What
is
if by
a costly affair. You are raising the fund from the public. So many intermediaries are involved. So many efforts are there. And it's a big event for a company. So one has to keep in mind the cost is whether SME, your IPO is less. So your money comparatively percentage will come out the similar kind of. So keep in mind it will be a costly affair, of course.
I think there is a continuous question is there on the annualized profit. He says, what if my IPO process start in the middle of the year, the April, May? Then in that case, whether the annualized profit has to be done.
No, so there is a requirement of 3 full financial year data to be disclosed. Plus, if I am filing the document after the expiry of 6 months from the latest audited numbers, then I have to draw the audited accounts for the stub period. So, for example, if I am filing say document in the month of October, then my March financial number will not hold good. Then I will have to do the audit for a stub period of say June, July, September, whatever the data available, in order to file the document in the month of October.
Somebody has put up a question: which stock exchanges got a more liquidity?
Sorry, which
stock exchange has more liquidity?
Again, I would put it differently. For example, my issue size is only 5 crore rupees or 10 crore rupees, because in the past there were issues of 10 crores and 5 crores and like this. Now the issue size has gone to 40 crores, 50 crores, 200 crores. As one of the slide mentioned, the KPI engineering, the issue size was 200 and I think plus crore, isn't it? So larger the size, the larger the liquidity, because then you will get larger number of investors in the company. Because if you divide 200 crore divided by 1 lakh rupees application, then how many application will have to be there in order to subscribe the full issue? So it all depends. Why the big companies are being traded more? Because it's an issue size of 2,000 crore, 3,000 crore. Now recently the X-hour issue was 8,500 crore or 7,500 crores. So this is being traded well because it's a big company and the big liquidity in the market. So it all depends how the company is demonstrating the interest post listing, whether the company has put enough on the table for the investors to make money if they also invest at the listing price. So these are the factors. Stock exchange does not guarantee the liquidity. Only it's the company which. Yes, sir.
Yeah. Yes, please go ahead.
No, I'm through. Please.
After the completion of the 3 years period of the market maker, promoter how to share from the market maker?
Buy share from the market maker.
Yeah. Buy share from the market maker.
See, promoters technically can buy. There is no written embargo or restriction as such, because when you are suppose market maker is holding some inventory post the migration or maybe post completion of 3 years, then he is like other shareholders. Then he is not a market maker. His obligation ceased to exist. So he can sell the shares. Now either promoters buys or you buy or I buy. It is one and same for the market maker, because he can't sell off market, or he generally should not sell off market.
Bala, I suggest that, Bala, 1 minute. I suggest that let us confine the discussion only to the subject concerned. Let us not diverge into market mechanism, because market dynamics are entirely different. If you want to understand about market maker mechanism, stockbroker mechanism and all, then we will not be able to focus upon the subject of today.
Very true.
So the participants might be more, some participants might want to know about the dynamics of other things. Let us first of all finish this subject, and then after that, if the time permits, we may go. Or alternately, we will organize one more webinar where we will discuss about the market mechanism separately. There we can discuss all these issues.
It's a very debated subject.
That time we will invite Jayesh Bhai once again, and he will be able to explain more in detail about merchant banker role, stockbroker role, market maker role, and all those things concerned. Yeah.
And if the participant can put the question.
No, one question which is again related to subject. Let me answer with your permission, sir. It is about, is it mandatory to have the peer-reviewed auditor for the last financial year? So need to appoint auditor before March 25. The company proposes to be listed. It's a good question. Now, many companies, by March 25, they have non-peer reviewed auditors. But the requirement is under the SEBI is that when you are proposing an IPO, you have to have a peer-reviewed auditor who will give the restated account for last 3 years. SEBI ICDR itself prescribes that for any financial year, the audited account was prepared by the non-peer review auditor. Then the peer review auditor, while doing the restatement of 3 years, will have to re-audit the last financial year and give a special purpose report to the company. So that solves the problem. So meaning thereby, if I'm disclosing my 3 years accounts, 23, 24 and 25, and all these 3 years accounts are audited by non-peer review, so 25 account needs to be re-audited by the peer review auditors, and he will also give the 3 years restated account. I think this gives the answer.
What is the role of the advocate and legal professional here?
Sorry, role of the
Advocate and the legal professional here.
So see now, I would tell you there are 3-4 interesting roles of the legal professional. One is any company which or the promoters or the directors will have something or other litigations. Now, since the prospectus is a liability document, whatever you disclose and don't disclose will have a criminal consequences. So generally the lawyers ensures 2 things in the prospectus. Whatever litigation things are required to be disclosed are adequately disclosed in the document. Number 2, they also go through the entire document and ensure that there is no extraneous disclosure made by the company, so that to that extent they safeguard the company, merchant bankers and directors, because who are signatory to the prospectus, all the directors and the CFO, and of course the merchant banker gives the diligence on the disclosure. So they protect the interest, ensuring that all the disclosures are in sync with the ICDR on top of litigations part. Number 2, there are multiple agreements need to be entered by the company with various intermediaries. That includes merchant bankers, that includes registrars, that includes underwriters, that includes bankers. So there are several agreements need to be executed. So they ensure that all agreements are vetted or given by them. Because when you give any bankers to the issue agreement, bank will also send it to the legal department. They have their own observations. So somebody needs to be there from the company to argue and thresh out those, the points which banks have raised or the underwriters have raised. So this is the role of a merchant banker. Many a time we have seen, along with the legal advisor, the practicing company secretary, or if there is a senior company secretary within the company, they also play a very crucial role to see that the disclosures are and the agreements are vetted by those people as well.
Can a private company?
One minute. In fact, one question which that no one is asking so far, I was just eagerly waiting for that. We are asking the role of everybody and anybody, but not about the company secretary, which is more important according to me, because several times the companies, what they do is they hire the company secretary at the nick of the moment because the company secretary requirement is there. And some people, what they do is they take the company secretary for a very short period also. Recently, we have come to know about one particular case where the company secretary worked for a very short time and the amount of disclosures were not given, and the company secretary is also in trouble along with the other promoters or directors, whoever they are. So according to me, the company secretary should ensure that he joined the company right from the inception. And despite the fact there are so many intermediaries who takes care of the respective roles, but it is the company secretary who has to ensure proper agreements have been entered into, proper non-disclosure agreements have been entered into, and every intermediary is discharging his responsibilities the way he is supposed to do it. Because most of the times what happens is when the IPO, if that post IPO, if the listing, the price is good, then nobody bothers for that. God forbids if the price is going on the other way around, everybody will try to hold the company responsible in one way or the other. In fact, I was a person, a company secretary, suffered in the past. I know that when the stock market got a debacle and declined completely, then the issue price has come down. The stock price has come down below the issue price. Then what will happen is the people will be up against you. They will pick up the holes and will hold the company responsible for that. So at that point of time, the company secretary should be ably defend himself as well as of the company and directors, which he will not be able to do it unless until he is thorough with the entire process. Yes, by your views, please.
So I will give you a very basic, the lacuna from say company secretary, which I have seen in one of the document. And it was not, of course, our company where we worked, but there was a company, and NSC has written the document back to the merchant maker and the company. Then the merchant maker went, "Yeah, all the disclosures are made. We are a good merchant makers, these, that, whatever." Then the NSE told that merchant maker and the company that the main object of in the memorandum of association is not what you are doing today. Okay, now it was a private limited company. They have converted to a public limited company because it is a requirement to come out with an issue. But even everything they have done, but nobody has bothered to look at the main object, because that main object was conceived few years ago. That time the business of the company was completely different. Today company is in altogether a new business. But till all these processes, the main object was missing. And it was a very tough time for company. Then they hired a company secretary. They said, "Okay, this is something, let somebody look at the entire secretarial part." Because so it is sometimes, we feel that our role is very basic. No, it is very crucial. Very crucial means I can't even imagine. There are, allotment made in the past, preferential allotment to good investors. Now, what company has done? They have not opened a separate bank account. They have used the money before filing Pass 3, right? Now, these violations under the Companies Act are very, very severe. This can lead to a penalty of equivalent amount of fund raised, minimum 2 crore. And even there is a requirement to refund the money. Now, you won't believe, in one of the company where, there has been a good investors have invested in the past, we have advised them to file 8 compounding application for 8 allotments. And the entire board, the auditors, all were shocked. These blunders, we can't even imagine that the company of our stature has done. Now, this is because there was no, qualified company secretary in the entire process or within the company.
Somebody has put up a question: can a private company directly go for the IPO, or first need to convert the public company and then apply for the IPO? Private company cannot go directly. They have to, first requirement, they have to convert in the public. So that is the first and foremost thing which they'll have to do it. Okay. Overall cost, we are not discussing it again. And then minimum. Is there the minimum amount that can be actually raised in the SME IPO for a company? At present, paid up about 6.5 crores. What is the minimum amount that can be raised? That is the question, I think.
See, there is a maximum amount what can be raised is there for SME IPOs. If I am not wrong, that is 25 crores. Within that, you can go ahead.
Okay.
I think let us go ahead further with the presentation, Bala, before you take up further questions.
Okay.
Yeah.
So shall I continue?
Yeah,
Please
please
do that. No problem.
Okay. Something's wrong with the screen. Just 1 second.
You are also not visible.
Yes, ma'am. Just 1 second. Yes. Okay, sir. So I'll continue from here. Valuation decision. Through the discussion, we have gone a little far in terms of all the preparations of IPO and processes, but I'll just quickly wrap this up and go to that point. Internal factor, because valuation is one of those things which actually control the whole game of IPO. And this valuation is actually being controlled by the two factors. One is external, the other one is internal. First, financial performance. The internal ones include first financial performance of the company until the date of IPO, and of course how the company has shaped its economical graph. Second is business model. Third is USP or the strengths of the company. Fourth, future business expansion plans, of course the projections of the company. Then we have experienced promoters and management team, and this basically depends on what the valuation game, how it will top up in the process. In terms of external processes, we have first current economic scenario, the share market and things like that, which are out of control of the company internally. Industry outlook, market position, market P, recent IPOs in our sector. So the industry specific to the company, in those industries, if there had been prior IPOs which have failed continuously, that would impact this IPO of the company. So that's about the valuation decision basis on the internal and external factors. Now, very briefly, we'll just quickly go through the scope of work that goes through in an IPO process. So first is understanding, analyzing, and structuring the deal. Second is pre-IPO. We'll talk about it in the following slides. And then second is pre-IPO readiness. Third is preparations. Then detailed due diligence, financial business, draft offer document and offer document to be submitted, marketing the issue, pricing the issue, then listing. Here, the promoter's contribution that has to be logged in the company. And then, of course, the minimum promoter contribution or shareholding that has to be maintained post issue capital, which is 20%. If there is any shortfall, then it could be covered up by alternate investment funds or foreign venture capital investments. And this can be subject to a maximum of 10%. Okay. Now the promoter shall satisfy the requirement at least a day prior to the opening. So that window, it's a big window. We have time to cover this up and maintain the share ratio required. Next is securities ineligible for promoter contribution. If the security has been acquired during preceding 3 years, and amongst that, consideration other than cash and revaluation of assets or capitalization has happened, or bonus issue by utilization of revaluation reserves or unrealized profits were there. Second, specified securities acquired during preceding 1 year at a price lower than the IPO price, it wouldn't be considered. Similarly, the last point, specified securities during preceding 1 year at a price less than the issue price in case of any issuer formed by conversion of one or more partnership forms or rearrangement of the organizations. Next, we have the lock-in period. So minimum lock-in period of promoters' contribution shall be 3 years from the date of commencement of the commercial production or date of allotment in IPO, whichever is later. Second, excess promoter contribution shall be locked in for a period of 1 year from the date of IPO. Then pre-issue capital held by persons other than promoters shall be locked in for a period of 1 year from the date of allotment. Exceptions wouldn't include equity shares allotted to employees, wouldn't also include equity shares held by employees in the ESOP plan. Lastly, equity shares held by VCF or AIFs, category 1, 2, or foreign venture capital investments. Then in the process, we have a brief flow, like what all will be included in terms of various intermediaries to be appointed. First, book runner lead managers, then peer-reviewed audit firms, legal counsel for the company, industry report preparations agencies, RTAs, investor relation and public relation agencies, cash escrow and sponsor bank appointment, bankers to the issue, tax advisors, legal counsel for FIIs. Next, we are in the process right now. IPO processes are usually in 4 to 5 steps. First, we'll talk about pre-IPO. After that, we have the documentation processes, which includes the due diligence. Third, we have preparation and filing of documents, and then appointment of various intermediaries, and of course, the submission and final process of IPOs, followed by the listing assistance post the IPO. Now, phase one is pre-IPO preparation. Here, first, as a first step, we would be appointing the merchant banker, specifically category 1 and registered with SEBI, to act as the lead manager to the issue and underwriters. Now, next would be the appointment for the legal advisor to go through the process. I think someone really asked the question, like, who does need to do the due diligence? Due diligence is normally done by the merchant banker, but here we see the second most important step is to appoint legal advisors, could be company secretaries. So here, even if the due diligence is led by a merchant banker, the thorough process is done by the professionals, the company secretaries. Then we have, if required, the authorized capital will be increased to cover up the IPO size. Then passing various resolutions and keeping the company share capital in due. Then audited, restated financials for the last 5 years by a peer-reviewed auditor. Financials should not be older than 6 months. Sorry, 1 second. After that, restructuring of board if required, it's usually required. Reviewing corporate and group companies. Then we have second phase, which is due diligence. As a part of due diligence, site visit is conducted. So all things are very specific to the requirements, depending on case-to-case basis. Understanding the business model of the issuer company, business profiling, business activities, and industry analysis. Then we have ROC search to be conducted, government licensing requirements applicable to the company to be checked. And then the exercise would also include preparing of the offer documents, which leads us to the next step. Here in the phase 3, offer document preparation, drafting of IPO offer document for SME IPOs in accordance with the provision of SEBI ICTR, Companies Act, SEBI LOTR, BSE SME listing norms, indicative heads of information for offer documents, includes capital structure, business review, objects of the issue, outstanding litigations, management, promoter, and promoter groups. Then we have appointment of other intermediaries, including depositories, registrar to issue, market makers, bankers to issue, printers, advertising agencies. It also includes drafting and executing agreements with all the intermediaries, which is also a very important assignment for legal advisors to ensure that each and every agreements and draftings of the settings between all this depository and the company is well noted, which will later be required to produce before the authorities in future. Then we have phase 5, where we submit the documents requirements as required by SEBI ICTR regulations, dematerializing shares of the promoters of the company, a very important step here, and lock-in period of the pre-IPO shares. Filing of a draft offer document with stock exchange, obtaining in-principle approval from stock exchange, filing of offer document with ROC for their approval, forms, applications to be filed with stock exchanges, pre-issue advertisements, issue opening and closing dates considered, monitoring the flow of applications and keeping a real-time discussion with the management of the company to cover up all the haywares going on in the process, coordinating with the bankers and registrars for deposit of application money, and finalization of allotment list in consultation with the stock exchange. Then the last step would be the listing assistance. Once we are ready with the due diligence, documents, agreements, processes, DRHP, and of course receive the in-principle approval, we get to the step where we get the final collection of figures from the ASBA bankers and bankers to the company. We finalize the basis of allotment of shares as fixed by the merchant banker and the registrars and SEs. Crediting shares, instruction to self-certified syndicate banks, corporate sections required, unblocking of funds, advertisements for allotments, etc. Coordinating and assistance in interview with stock exchanges, listing advisors committee, filing of listing application to the stock exchange, assisting in legal formalities and obtain BSE's trading approval, NSE's trading approval, trading to be commenced within 6 working days from the closure of public issue assessment, as to be eligible on various parameters, to identify lead merchant banker, and signing of engagement letter. Now, until this, we are actually done with the IPO process. In the interest of time, I had been very quick. Sir, if you want to include something here in the processes.
Yes, I want to ask one small thing.
Sure, sir.
Now we are all talking everything is the online and digitalization and other things, everything. In the light of that, is the printer's role is much essential today?
It has reduced substantially, sir. It has reduced substantially. Only handful copies of the prospectus we get it printed, and of course application forms are almost online. So
yeah, that is what since everything has become digitalization.
It substantially got reduced. Yes,
Okay.
yes.
Yeah, Jayesh, if you want to say something on the process, what's he?
Yeah. So my request is, there are many questions. So I request Namrata to finish the process part, and then we may answer the questions. Give a lot of clarity to all the members. So
yeah. So we will finish the presentation and then take the question. That is
I think process is about the role of all these intermediaries. The question, then whatever possible we can answer.
Yeah. Okay. Then Namrata, you finish the presentation and straight we will take the question.
Right.
Jayesh, wherever you want, you can intervene now.
Definitely, yes.
Now, this is a gist, like after filing draft.
And Namrata, you can be a little slow. Don't rush because otherwise it will be entire efforts.
Yes.
Yes.
Okay.
Yeah.
So after filing draft prospectus, stock exchange observations are being shared. The site visit by stock exchange officer happens. Promoter interview by stock exchange, and then the demat of pre-IPO shares. Similarly, in principle approval from stock exchange, post-approval work, final prospectus, file prospectus with ROCs, registration of prospectus by ROC, open issue, allotment, categorization, listing, and trading approvals. And then various factors determining the market valuation, like EPS, turnover, PET, etc. Then we have some prerequisites of IPO, and also similarly some post-IPO. There's a long list covering just the basics of the overall ones. Firstly, restructuring of the board is required. It's because we have to appoint independent directors in the specified ratio. Women director, company secretary, CFOs, KMPs basically, and then composition of board of directors. At the same time, statutory compliance post-issue IPO includes half-yearly financial results sharing, shareholding pattern sharing half-yearly, major corporate announcements and corporate actions to be done, and then quarterly, half-yearly, and annual disclosures.
I'll take 1 minute here on the composition of the board. There are some questions also.
Yes, sir.
So, it is compulsory to appoint independent directors. The requirement is 1/3 members should be independent. Okay. This may include, may not include woman director. Woman director is also compulsory. Woman director can be executive also. Now there are also requirement of constitute for compulsory committees. One of the committee is an NRC committee, isn't it? So now, for example, hypothetically, if there are 2 executive directors or the promoters directors, both are drawing the remunerations, then you will say that you appoint one independent director so that you are in compliance with 1/3 independent director's requirement? Answer at the prima facie is yes. Now, the constitution of NRC, which requires all the members should be non-executive directors. So, in order to facilitate constituting the NRC, two promoters directors who are executive directors, they cannot be part of that committee. So, in order to facilitate, either we have to appoint two non-executive directors or even two independent directors to ensure that this committee requirement is fulfilled. Right? I think this gives a lot of clarity, because this is the basic, typical question in all the SME companies, because the board is so small and they are saying somewhere it is written only 1/3 directors are required. Then we are appointing one, will it suffice? No. They have to definitely, put two more directors, be it non-executive or independent.
Yeah, go ahead, Namrat.
I have to say that whatever you said, further to add that sometimes the question comes at what point of time we have to reconstitute the board, at what point of time we have to appoint the KMPs. So these questions, okay, that you may not find the answers in the listing regulations as such, but it's always advisable to have these people in place at least 6 months before, if not more.
Yeah.
Okay,
Because when
what
you
is the
file
reason for that? See, sometimes we keep apart the legal requirements. As I was telling that for a company to going from a unlisted company to a listed company, there is a transformation is taking place. Don't expect the board also to perform in a compliance manner overnight. So the board meeting also and the directors have to get accustomed to what they are supposed to do it. So at least 2, 3 board meetings should take place as if it is a listed company. So you can say this is a pre-trial exercise kind of thing. So the committees to be there in place, the board should be there in place, and when should the committees pre-IPO itself, that point of time, what happened is one of the objectives of the committee is to take a deep dive into every aspect what it is supposed to tackle. Dealt with. Say, for example, NRC. When you are having the directors, you are going with an IPO. Whatever you are taking the directors, in fact, it is the responsibility of the NRC to take proper people with having that whatever that integrity and ethical values, blah blah blah, and all, without any kind of a bad patch on their character, so that tomorrow when you go with your when you file your DRHP, there should not be questions about their credentials itself. So it is always better like that. Najesh, you want to say something about it?
Yeah. So in any case, before filing the DRHP, everything has to be in place, because we have to write in the DRHP, and also we are certifying as a merchant maker that yes, company is in a compliance with necessary requirement of corporate governance.
Yeah, yes, Narmada, go ahead.
Yes, sir.
Nomination and Remuneration Committee, NRC, full form of NRC, somebody has asked.
And as regards composition, someone has asked if the chairman is an executive, then 50% independent director required.
No, 1/3.
Okay.
This is as per LODR, because LODR provisions are not yet applicable to SME companies.
Yeah. Yeah, Namrat.
So there has been some practical difficulties that come up as a gist of all the IPOs, and the professional discussions that goes around it. Includes non-compliance with the provision of Companies Act. Generally, the non-compliances arise in areas such as loan taken from or given to the directors. So understanding and doing well with Section 185/86 of the Companies Act 2023 plays a very important role throughout the IPO processes to build the books well and to pay off the loans existing whatsoever, and to be in tune. Second practical difficulty faced is the auditor of the company, which are generally non-peer reviewed firms. So the financial statements, as we discussed earlier, shall be peer reviewed by the shall be approved and audited by the peer reviewed firm. So the financial statement of a listed entity can be audited and certified only by an auditor which has been certified by the peer review board of ICAI. What the company does not have a website or logo, so it's fine. I mean, the requirement is not to have mandatory logo or any display image of the company. So if the logo doesn't exist, it's fine. And even if it exists and it's not procured as a intangible asset, it's fine. Next, the composition of vote we are already discussing. Litigations against the company. So when we talk about the agreements in place already, or situations where the company has had multiple agreements internally with various intermediaries or agencies or stakeholders, it's relevant to ensure that all the agreements are in tune, and in case of any discrepancies, the litigations, if started, should be closed in the merits, and the penalties, if required to be paid off, the stakeholders shall be in the company's welfare side, and the complexity should be reduced as much as it can be, so that the negotiation power and the valuation gets increased by the company for itself. So litigation against the company, there may be certain litigations against the company which are required to be disclosed in the offer document. Resolved, unresolved, it's the disclosure mandatory exists. The company may at times not be having all supportive documents in relation to such pending litigations. So these are a few. Yes, ma'am. So these are a few, I mean, there's a long list of practical difficulties, but these are some that have in past case studies impacted the IPO processes, or led to filing of cases in such situations. We have a couple of case studies here. Shall I go ahead, ma'am?
Yeah, please.
We'll talk about the Nagaraja Rao case here. We have one Nagaraja case, then second we have NSDL case, third is Almonds. This will start with the Almonds case first. Here, Shri Rustam ji, one second. Yeah. So, Shri Rustam ji, a learned senior counsel for the respondent, has firstly submitted that the appellant could not ensure disclosure of funds raised by the issuer company through ICDs in the nature of a bridge loan. That is the loan taken by the investor company through ICDs in the form of a bridge loan, which would bridge the gap until it arises at the IPO and the pre-IPO gap. Then, secondly, he also submitted that the red herring prospectors did not disclose the board's decision to invest the IPO proceeds in the ICDs of other companies. The appellant's failure to ensure the disclosure of these facts regarding taking decision to grant loans through ICDs would amount to lack of due diligence. So the complete case is about non-disclosure of facts, and the case built up that way. Therefore, the finding in the impunged officer order that the appellant as an MB of the issuer company for the IPO in question had failed to ensure genuine and true disclosure of material facts regarding the decision of issuer company to make that investment, which cannot be faulted with. Then, as far as the decision of deployment of funds through ICDs is concerned, it was then emphasized that the facts of the case was to be done through the IPO proceeds. And since the IPO proceeds had not yet been transferred to the escrow account of the company yet, this was a post-IPO transaction, which the appellant could not have any control over whatsoever. As per regulation 16 of ICTR, a monitoring agency is mandatorily appointed in the case wherein the issue size has exceeded 500 CR. In this case, it was under 500 CR. Thus, we carefully considered the points urged by the appellant in appeal number 300 of 2014. It is admitted that the position of appellant was the MD and CEO at the relevant time when the IPO of the company was issued by Elements, acting as the BRLM for the IPO in question. It was therefore the duty of the appellant to ensure proper compliance with the legal norms to be adhered, including the disclosure requirements by the officers of his company. In this connection, it is pertinent to note that as per the SEBI rules, where an offense under this act has been committed by a company, all the persons involved who were at the time the officers of the company was committed to be in charge and hence were responsible to the company for the conduct of business. As well, the company shall be deemed to be guilty of the offense and shall be liable to prosecute against and punished accordingly. I think the complete case was around the disclosures. The due diligence involved the merchant bankers as well. So talking about the IPO processes that we seen in the slides earlier, the most important things that's after the appointment of the intermediaries where the documents are prepared for the pre-IPO situations, due diligence is conducted. Hence, every details, including the money routing here and there, should be accounted for, and hence it should be disclosed in a clarified manner. So this was the first case on the.
I think, Namrata, as regards decided cases, your PPT, your presentation is over. Now decided cases only is there.
Yeah.
So in that case, I think Jayesh Bhai can share practical his experience.
Yes,
Non-compliance will be a better way of presentation.
Yes.
And we can take the questions. So Jayesh Bhai can give more time to the people who want to know more about market or anything, practical questions.
So Namrata,
Deepti, before that, with your permission, I want to make a submission to the participants. See, the type of webinars what we are organizing are unique in its nature. My humble submission and request to all the participants is, if you come prepared, you will appreciate the webinar what we are organizing and the subject also. So what my request, advice, humble submission to all the participants is, please come prepared. Because sometimes when the question comes like that, whether a private company can issue the securities without converting into a public company, what is NRC and what is a specified security, this shows very poorly to the panelists or to any outsiders who are actually joining our webinars. So my request is, please do come prepared so that you will appreciate it. Very elementary questions, at least I don't appreciate that from qualified company secretaries and chartered accountants. I'm sure that the participants can understand what I'm saying that. And if you want to really take the advantage of these webinars, come prepared, participate, put your questions, and then post webinar also. All these presentations, webinars are posted on the YouTube. Have a relook at it so that you will be able to get the essence of the presentations, what in the webinars the presenters are making. Okay. Yeah.
Yeah, Jayesh Bhai, you want to say something and then we take a question as well.
Sudhakar sir has very rightly pointed out, because sometimes, as a faculty or panelist, we try to answer as many questions as possible within a limited time frame. So if the relevant questions come, I think we also enjoy and appreciate. Now, somebody has put a very interesting questions. I'll start with that. How do we decide the capital structure? What component, what size of the bonus issue we can do? How? Yes, sir. I think you're on mute, Sudhakar sir.
Sorry. I'm asking Namrata to take her presentation out. She can stop screening share.
Yes, sir.
Yeah.
Yeah.
And is it possible, Namrata, to quickly read the questions and we
I'll
read
for you.
So that everybody can get benefited.
I'll read for you. SME company listed has to compulsorily listed the main board, or can it be delisted after lock-in period?
No, so see, the SME company needs to be in a SME exchange for a period of 3 years. Post 3 years, they have an option to migrate to the main board, subject to fulfillment of certain conditions as may be prescribed by BSE or NSE, as the case may be.
Any minimum turnover to go for the 25 crores? I think we discussed this actually, because he said maximum is there within that.
Whatever you feel relevant, only you speak out, sir.
Yeah. Is it allowed to issue share other than the cash when proprietor consensus is converted to a company?
I think there are ways and means to take over the business in a limited company. Either you take over the running business of the proprietorship firm and you issue the shares. So these shares are issued against the consideration of acquisition of business. You can take over the running business of partnership firm. You can convert partnership firm into a company. All are possible and happening, and generally very basic in terms of the structure part. Okay.
Mr. Bala, there was one question which we missed.
Yeah.
The participant asked that if we acquire the partnership firm, if we partnership firm into private limited company, whether that 3-year track record compliance is considered, it is complied with. That was the question when you said convert the firm into private limited.
Yes.
Initially, he addressed this particular issue. That is why he skipped that question.
Okay.
Because initially, JS discussed this question. Actually.
I already explained this. Yes.
Yeah, that is why. Any ballpark figures for the yearly cost involved in meeting the statutory compliances?
There is no ballpark figure, but I think generally, the cost of compliance is payment to the registrar and transfer agent, payment to the depositories, payment to the professionals who are, additionally involved in terms of compliances, but not the cost vis-a-vis the benefit being listed. I think it's nothing.
Is it necessary that restated accounts should be in comply with the Ind AS, or it can be as per the AS?
I think SME companies are exempted from complying with the Ind AS, so they can do under Indian GAAP.
What percentage of the existing share capital of the non-directors shareholders can be put in the market for selling in the first month of listing?
There is a lock-in requirement for all the pre-issue shares. 20% of the post-issue capital for 3 years held by the promoters, and for a 1-year period for rest of the pre-issue capital. So in the first month, nobody can sell any shares.
Where should a CS training work to get exposure to the IPO and its nuances?
The best things to get the exposure is to work with the practicing company secretary who are advising SME companies for their IPO. They can work with the merchant bankers who are doing the SME IPOs. And if they don't get that opportunity, then I request them to read all the SME IPO prospectus thoroughly and get acquainted, because this is the best thing to do, which I have personally, done in the past.
Which gap needs to be implemented
we discussed,
in
yes.
days? This you already said actually. Okay. Can you clarify who should we do the due diligence? May I had the missed answer in this question. I think you said merchant banker.
Yeah.
Merchant banker has to get the thing. Merchant banker has to submit the banker. I think that is also answered here actually.
And in reality, it is done by CS or law firm.
Yes. All the professionals put together, because it's a professional.
Banker take the help of them. That is.
Yes.
Yeah. How many minimum years of the experience should be required to appoint the CS? Is it any specific requirement?
There is no specific requirement prescribed, but nowadays stock exchange mentioned that at least you hire a company secretary with at least 2 years of professional post-issue qualification.
Could you please elaborate the amount that can be raised versus profit and revenue? I don't know what exactly the question is.
Yeah, he is telling that if what is your profit and revenue, then against that, what maximum amount you can raise, that valuation. Just by that.
Practically, I'll just, in a very nutshell.
Yeah.
Any size of the IPO is decided on the basis of P multiple. Okay, so my, because the compulsory dilution is 27%. Okay, so you have to allot this many number of shares. You multiply by with your EPS and the P. What is your EPS? EPS is, for example, 10 rupees. Your P multiple is 10 rupees. Your issue price is 100 rupees. You are diluting 26%. Multiply by with that number. That is the size of the issue.
25 crore is a market cap post allotment?
No, 25 crore is a paid up post-issue capital. Paid up post-issue capital.
If 25 crores exceeded due to the subsequent rights issue and NCD, should company go to main board exchanges?
No, I got the question quickly. I'll answer. Today it is prohibited to do any further issue if that issue takes you to beyond 25 crores, be it a rights issue, preferential allotment, QIB, FPO, whatever. But SEBI has come out with, I think already they have passed in the board, last board meeting, they have not notified yet. But if company intends to comply all the provision like a main board company, then they can cross that 25 crores paid up capital, and they will remain in the SME exchange only, and they will not migrate to the main board automatically.
So that means circular is awaited for that.
Circular is awaited for that, yes.
Okay. What if there is an undersubscription of the IPO?
Merchant banker has to underwrite, and he is responsible to fulfill that underwriting obligation.
What should be an average cost to raise per 1 crore to the company? I think cost aspect we won't
Yeah,
discuss.
we will not get into that, yes.
Okay. As I understand, promoter holding cannot be below 75% of the post-issue main. I was wrong. Or was it 20% post-requirement of this issue? I think you clarified it is 20% of the issue. That is what it is required.
Yes.
Yeah. When migration of the SME platform to the main board becomes mandatory, any market capitalizations threshold applicable?
It is not mandatory. There is no threshold. If the company feels that they are good enough to go to the main board, they take the shareholders' approval and migrate.
Is it mandatory to have the independent directors in the SME company? That you answered very elaborately.
Yes.
Actually, we discussed this.
Yes.
What exactly mean by restatement of financial statements?
Yes, it's a good question. Restatement is, what happened. I'm disclosing 3 years accounts to the investors. So in 3 years, as a company, I might have changed some accounting policies. I might have not given some effect of the previous year. So when I draw the restated account, as if all the accounting policies are applicable today for all the 3 years, then how account will look like. So this is the broad, the purpose of restatement of the accounts. The Institute of Chartered Accountant has given guidance note for preparation of the prospectus accounts, 2019, updated. My request to the members present here to read that. It has given a very elaborate guidance on the restatement of the accounts.
Can the subsidiary of the public company issue an SME IPO?
Yes, they can do.
Who acts as the market maker during the phase 4?
There is no phase 4 and phase 3, phase 2. It's only phase, single phase. 3 years. It's a phase compulsory.
Determining the right capital structure is a crucial in the IPO. Could you please highlight on the factors influencing such a decision? Specifically, what scenario should a company consider issuing the bonus share, right share, bringing out the investor? How should they determine the quantum of the offer of the sale of offer by sales, and what are the critical aspects to consider? What is the pricing, etc. in the IPO?
Okay. So 2 factors we have to keep it in mind. One is, see, I cannot go beyond paid up capital 25 crores post issue. Okay. So whatever number of shares I decide, it should not lead to crossing my 25 crores paid up capital. Number 2, depending upon the size of the IPO, generally we advise company to decide the bonus issue so that optically, the issue price looks more reasonable. Of course, there is no scientific reason to that. But for example, if you are selling an SME IPO at 600 rupees price, 700 rupees price, or 800 rupees price, and if you are selling IPO at 100 rupees price, now this is an arithmetic. Okay, if you lower the capital, issue price is high. Larger the capital, issue price is low. So you have to take the midway to see that the price looks more reasonable to the investors at large, but valuation doesn't change.
I get that physical application is compulsory out of the process nowadays. Please give your views.
Yes.
How allotment basis is finalized by the stock exchanges, or random basis shares are allotted?
So nowadays everything is well computerized, where the registrar prepares the basis of allotment. Now, for example, my application number is 1, 2, 3, 4, 5, 6, 7, 8. Then they do the inverse of that application, 8 765 4321, and then they prepare the entire basis. The stock exchange decides by random putting the number that first, third, fourth, whatever and absolutely it is a computerized system driven allotment and hardly any human intervention.
Are the requirement for independent directors any different from the one that are applicable to the public listed company?
No, I think we have already discussed 1/3 is the independent directors requirement. But yes, if I have a very thin board, then I will have to appoint more independent directors or more non-executive director to fulfill the committee requirement.
Under circumstances, the independent directors shall be 50%.
Not in SME companies, as we have already discussed.
Yeah, that is what you said actually. In
Yes.
SME company, it is only 1/3. That is what you actually
Yes.
said.
So I have to follow the
Yes, sir.
company act. Correct.
Yeah. At which stage of the company required to comply with the various compliances application to the listed companies? It is the formation of the various committees, formation of the various policies, deciding the promoted or promoter groups, and before listing DRHP or before filing a prospectus.
Before filing DRHP, not the prospectus.
If the chairman is an executive, then 50% of the individual. This you discuss actually. It is only 1/3 only. There is no question arises in case of the SME exchanges. Please confirm in the right of exemption of the corporate governance to SME whether all these compliances are required other than the compliances required under the Companies Act regarding 177.
No, there are certain, I think, carve-out exemptions given under ICDR. We can, I think, I need to look at the exact regulations. But my request is if you read the LODR, in LODR itself, there has been a mention about exemption to SMEs.
Under the subscription occurs within the demand of the shares of an IPO is less than the share offered by the company under subscription.
Then I think merchant maker will have to make good of that under subscription.
Somebody's put a full form of NRC, we talked about it.
Yeah.
Specified security, somebody has put it, I think we should not discuss. Restatement, we actually start about it. SME SEBI guidelines compliances Act exempts our company for adoption of the gap as per the index. This also, I think you said
yes,
actually.
we discussed. Yes.
Can the PPT be downloaded? No, PPT is not shared actually. Recorded webinar is actually disseminated via the YouTube. You can actually observe that. There is no problem. Somebody has asked what were the penalties imposed in this case. I think which reference to which case, I don't know. Any case laws he is talking, I don't know, please.
That Namrata was talking, no? That's he is asking.
Almonds, something, yeah.
Okay. Migration from the SME to the main board mandatory when the post issue capital exceed the SME threshold of 25 crores.
Yes,
we have discussed.
1 year restatement accounts as per the Indian GAAP or Indes, SEBI guidelines exemptions for adopting the Indes. Yeah, that is what you said. We discussed this actually.
Yes.
Okay.
1 minute, Bala.
Yeah.
In
Yes,
case as the listing requirements, if you see the listing regulations, regulation 15 says that the provisions of chapter 4, that is primarily of the governance, shall apply to a listed entity which has listed its specified securities, that is equity shares or convertible equity shares, on any recognized stock exchange, either on the main board or on the SME exchange, or on an innovative growth platform. So to my knowledge, even Regulation 17, which primarily discuss about the composition of the board, is equally applicable to SME listed companies also.
No, there is some carve out, sir. I think let me figure it out and share with you also.
Okay. Just anyway, that let us complete the questions, and in the meantime, that I thought I will bring it to your notice because I am not. I was thinking that chapter 4 is applicable to SME listed companies also. If the carve outs are there, I am not familiar with that.
In case of the migration of the BSE SME listed company to the main board, One of the conditions is that there is a cooling period of 2 months from the date of the security has come out in the trade to trade category, or in this regard, any company under ESM stage, and periodically call option can be considered as surveillance action.
Main board, one of the conditions is that there is a cooling off period of 2 months from the date of security has come out of the trade to trade category or any other surveillance actions. Yeah, so I think nowadays NSE and of course BSE has come out that the company should not be under any surveillance for the purpose of to be eligible to migrate to MA board. So I think whatever he is saying is right.
Either any lock-in period for the shares issued to the employees under ESOP post-listing.
If my ESOP regulation is in compliance with the SEBI share-based regulation, then there is no lock-in.
Is it required to take the industry report from the professional agency?
Depends on a merchant banker to merchant banker and the company to company. As we go, we definitely take the industry research report from recognized agency like CRISIL, CARE, who has a research arm to give us the research report.
A company must have at least 50% of the independent director on its board if the board chairman is an executive director, or 1 minute. Or if a non-executive director is a promoter or a related high-level manager.
We'll discuss that.
Yeah.
Yeah,
Any example where the SME IPO has been undersubscribed?
There are some instances in the past, and generally what happens when there is a less demand in the market. So sometimes companies, instead of going for the underwriter's development, they decide to withdraw the issue and relaunch maybe after some time.
How to choose the anchor investor? Any suggestion?
So anchor investors need to be QIBs, registered QIB with SEBI. So again, the merchant banker plays a role to do the road shows, meet a lot of anchor investors, and then generate the demand. So maybe you are approaching 50 anchor investors, but 10 may get ready to invest, or maybe 50 all may get ready to invest in your company. So they go by the presentation and the DRHP content.
Any specific timeline to make the application to NOC of the security deposit release? Please share your views.
Security deposit, I think also now they have done away with.
Done away with. Yeah, it is done.
Yeah.
Even
How far?
That's why I think there is
Security deposit.
How far management is responsible to share the
Yes,
price
sir.
falls? How far management is responsible for share price fall below issue price? That is happening nowadays in so many cases.
Yeah, so it is a market driven. But yeah, it is not in the hand of the management or the company. Howsoever good company it could be, I think shares can fall if the market is not conducive.
If the shares are allotted in lots, how the lot size is determined?
So minimum value of the lot is 1 lakh rupees up to 1,50,000 rupees. So that is how the lot are decided. And of course, exchange have given their, the lot wise amount, issue price wise, the lot size. There is a prescribed lot size given.
Somebody is sharing information. Regulation 16, the lock-in period is exempted to SME as told by Sudhakar sir. If CFO is not experienced with the IPO, any advice to appoint the experienced person for that position? This company has to take a call, isn't it? We cannot say on that. If CFO is not the experienced person with this IPO, any advice to appoint the experienced person for that position?
very internal and of course, as we have discussed,
Yeah.
the IPO is a very complex process, and definitely the more experienced, enlightened person within the organization can help, have the better process and the
But
outcome.
yes, but let me add to further to that, whether the company takes an inexperienced person or not, it is always advisable for the concerned professionals before accepting that kind of responsibility.
Yes,
See,
yes,
this is not only mere responsibility, it is a legal responsibility. So you have to equip yourselves, you have to get experience within no time before handling that particular assignment. Otherwise, God forbids if anybody challenges that issue on account of any
correct.
non-compliances and all, as a CFO, you too will be held responsible. Maybe as a company secretary, as a director, you know.
Very true.
There are any restricted sector of the business model company which cannot bring SME IPO?
Generally, SME, the major negative, of course, it is not on record, but just for the information of everybody, it is they come on the board.
I think somebody has put the compliances with the corporate governance provisions are specified. He has given the regulation numbers for the information. And they listed having the equity capital not exceed rupees so much, etc. I think there's a provision he is actually sharing.
This is
With
the
you. That's
same
all.
thing, Bala, which I am mentioning actually. Regulation 17, he has reproduced it. Regulation
Yeah.
17 talks about the board composition.
Okay.
Yeah.
I think that's all. I have finished with the questions which are there actually on this.
That only one point I would like to add, that since we have another 7 minutes before we wind up. See, question has come about the appointment of directors. See, it is the responsibility of the
Yes, sir.
company secretary to assist the chairman or the managing director, whoever it is there, for the board composition. Board composition means you have to ensure the provisions of the Companies Act as well as of the listing requirements. When I'm talking about the Companies Act means you have to constitute the committees, audit committee, your suppose the nomination, recommendation committee, stakeholder relationships, CSR, and like that 4 committees you have to constitute. In addition to that, you also have to comply with Section 152. Directors to retire by rotation, not to retire by rotation, and all those things are there. So you cannot operate with one independent director. At least 2 independent directors are minimal to you. Even if you are not a listed company, but you have got come into the classified public companies, you have to have 2 independent directors. And similarly, in this case also, when you are planning an SME IPO, you have to constitute the committees, the statutory committees, whatever are required under the Companies Act, if not under the listing regulations immediately. So that point of time, again, the same thing. To constitute the committee, audit committee, you have to have minimum only, I mean, the independent directors are to be more than the executive directors. In case of NRC committee, 50% have to be non-executive directors. That means remaining can be independent directors. So you have to see all these things, and accordingly, you have to advise your management to compose the composition or constitution of the board accordingly. Okay.
Thank you, Sudhakar. Jayesh, you want to say anything
Yeah, so
or
just to add on the directors composition. So what generally the piece of advice to the companies, because the company has three pillar. One is the account and finance, second is the legal and secretarial, and third is the industry in which the company operates. So we generally recommend to hire 3 independent directors having background of each sectors. So somebody from legal and secretarial, somebody from the account finance, and somebody from the industry. So it is a very nice composition, from the independent director point of view. And largely wherever we have done the issues, we ensured that these 3 independent directors are invariably appointed, irrespective of the also many the executive or promoters directors.
In fact, there's one question which has not come, but I would like to ask you is about the pricing part of the IPO. In fact, somebody put a question also, why that Paytm is failure and Zomato is successful. So pricing is equally important whenever a company goes for IPO. They have to leave something for the shareholders on the table. Your views?
So, sir, pricing, nowadays, if you have, observed, SEBI has come out with the KPI disclosure requirement. That is the key performance indicators. So, what they are trying to tell in the document that suppose I am a company in a cement sector coming out with an issue. So, I will put the comparable 3 listed companies financials, their price performance, and how they are, behaving in terms of the entire, business in the market. So I will have to benchmark my IPO price with those companies. And they are not saying you do like this only, but they are saying you put those information in front of the investors so that they can factor. Suppose Ambuja Cement is being, valued at 20p. Other cement companies being valued at 25p, and average P is 24. If you are bringing an IPO at 30p, then definitely it is an expensive. But if you are bringing IPO at 15p, then you are giving discount to the formidable, good market players. On top of that, they are saying if there is a large issue, and if you feel that, forget about Indian companies, I am also willing to give some comparable data of the global players. Okay, because now if you look at the size of especially the main board are going very high and high. So they also wanted that you put which was not previously allowed. But nowadays companies are putting, the global peers. So for example, Zomato is doing, then Zomato can put somebody who is in US, somebody who is in China, their financials, their track record, and their parameters, so that the investor will have an informed decision.
So when this has come, this KPI indicators you are mentioning, when this
They
has
have,
come?
that has come with more detailing nowadays. Previously it was there, but SEBI has come out with a good framework now, and it is interesting. Everybody is decoding that framework. Because nowadays, the investors who are participating are not only local investors, they are global investors. So they also would like to see where do I, position in terms of my with the global competitors. But yes, PE multiple is the major determinant for deciding the IPO price.
Jayesh, somebody is asking how to choose a merchant banker. Any checklist or point considered for choosing the merchant banker? Any checklist?
No, so meet 3 merchant bankers for sure as a company. Though I am a merchant banker, I'm not saying you meet me alone. Because ultimately he is your vendor to give the services as a merchant banker. So you meet 3 merchant bankers, ask them to give the presentation how they are looking and viewing our company. You share some basic information with them, give your business plan, and let them run a presentation to you. If you are convinced, okay, yes, he is the right partner for me, then you select 1 or maybe 2 also.
I will actually put it, see many, select 2, choose 1.
Yes, very true. Very true. Nicely said.
I think that is all. Our questions are over actually. If anybody would like to ask a question or something like that, anybody wants to raise the hand, they can. But as of now, I don't see anybody's hand is risen actually. Yeah, I don't see any hand is risen actually. Yeah, anybody is there? Anybody would like to ask any questions, etc., please?
They ask that any trading company can come in as IPO.
Yeah, it's another question has come. Can a company engage in the trading company, meaning KPI, go for IPO?
Trading company can do the IPO.
Yeah, maybe done.
Now, for example, I would say DMart is a trading company.
Yeah.
They are not manufacturing anything.
Yeah.
Okay, so what kind of trading? There is a value addition, and there is investors can make money from your shares. I think this is a good company.
Yeah, I think all questions are answered, and we can close the session. Just by if anything more.
No, thank you very much. I think it was a nice interactive session. I was not expecting this much, participation across all the participants, and I could see more than 230, 235 at the peak, the participants. So it is really an amazing and very satisfactory, session.
Yes, you'll be actually seeing now at the closing time also we have about 150.
Yes.
Normally towards the end of the session, the attendance drops actually.
Yes.
Now, if you look at it at this point of time also is 150. That shows the importance of the topic. That also shows the people's willingness to learn and impart the knowledge from the experienced people like you. Thanks a lot. Thank you very much. You shared a lot of valuable experience today. Even some of the points which I was actually got confirmed today with your views. Thanks a lot.
Thank you very
In
much.
fact, especially the merchant banker, whether merchant banker can act as a market maker. Yeah, that you clarified to me. Thanks a lot. I personally benefited. Similarly, I am very sure all the participants would have been benefited. Thanks a lot. Last word to Dipti, over to you.
Yeah, thank you, Jayesh bhai. Thanks a lot. And again, we will bother you because this is a very vast topic. So again, for future, we will be connected. Thanks a lot for sharing your experience. Thank you.
Thank you.
Thank you, everyone. Thank you, Namrata.
Thank you, Jayesh.
Namrata, well prepared presentation. My special appreciation to you. You put it everything very nicely, eloquently, and your explains also very nicely. Thanks a lot. Good work done. Thank you.
Thank you.
Thank you.
Sudhakar sir.
Thank you.
Thank you, Jay sir. Thank you.
Thank you.
I echo the same, Namrata.
Thank
Thank
you.
you.